Hey everyone, back again for the Arca crypto market call, February 2024. I believe this is our fourth one now. Joined as always by my partner here, Nick Holtz, on the research team at Arca, and I'm Jeff Dorman, Chief Investment Officer at Arca. Thanks again for joining. For those who are maybe watching this for the first time, just a real quick kind of backdrop again of why we do this. Arca's been full-time doing digital assets investing now for almost 6 years. But prior, I worked in investment banking in some big, large bulge bracket firms, Lehman Brothers, Merrill Lynch. And one of the things that I always got excited about was a market call that we did at Lehman, which really kind of went into the weeds of what's really happening in the fixed income and the equity markets. This is 20 plus years ago, back when the internet was kind of just getting started, not that much information was known of how to get all this type of data. And Lehman did a really good job of sort of explaining that to investors who wanted to get much smarter and much more granular. What we've learned over the last 6 years here at Arca is that we do a lot of high level education and very proud of the work that we've done. You can find a lot of it on our website at ar.ca. But the investors are getting smarter. They want to know more. They want to see the data. They want to really kind of dive deeper into the weeds of what's actually happening in the crypto markets, not just sort of the high level stories of, oh, there's a Bitcoin ETF or, oh, Solana's higher. So we hope that we're providing that for you. Would love feedback and comments. Please don't be shy about hitting us with what you want to see, where we're hitting on the right things, where we're not, and any other types of in-depth nuances that you want to see. But, Nick and the research team here at Arca do a tremendous amount of job of parsing data, making sense out of it, and turning it into investment theses. And we want to share that with you guys once a month. So let's kick it off in terms of what's really happening in the market here. Before we do, a quick disclaimer. This commentary is provided as general information only and is in no way intended as investment advice. You can read the rest on the screen here. So, broadly, and Nick, tell me if I say anything that you think otherwise here, but as much as I always talk about 2022 being the anomaly where correlation between all asset classes rose, and really, digital assets has been, other than 2022, really a completely idiosyncratic, uncorrelated asset class, right? It really kind of marches to the beat of its own drum. And it really hasn't been that affected with overall macro conditions, other than again in 2022 when we had an incredible black swan type event where we went into the year thinking the Fed was only going to raise rates 3 times in a total of 75 basis points, and instead, of course, we had over 400 basis points of rate hikes, which ultimately broke everything from the tech equity market to banks to obviously many crypto companies that ultimately went bankrupt and had to deleverage. That being said, even though I still believe that, and I still think that this is a very uncorrelated asset class and will be for the foreseeable future, we can't ignore the macro. There's still parts of the overall macro environment which do drive investment sentiment and investment flows. And I think starting, at the very top, we're just in a very supportive environment from a liquidity standpoint. We've seen this both in all-time highs in the equity market, as well as rallies in the dollar and treasuries and gold. This chart specifically, how is this measured, and what does this mean to you when you're looking at these cycles?
Yeah, I mean, this is cross-border capital. They do great work. They're measuring liquidity kind of across the board, across, I think, like 21 different measures, global. So every country, central banks, moving cross-border payments, remittances, all the like. So they're really capturing everything here, and they've been known to just be really good at demonstrating, where liquidity is going, and that they've shown how much that leads financial markets. And what they're saying here is we're in the early stages of a kind of global liquidity upswing, and we've really seen that inflect higher just in the last few months here. And you've seen that reflect since September, October in asset prices across kind of global markets.
Yeah, and I think both things can be true, right? I do think that the price action on a day-to-day, week-to-week, month-to-month basis of digital assets can be, largely uncorrelated to even sometimes negatively correlated with other asset classes. But that doesn't mean that we ignore the overall macro backdrop, which is when there's improvements in liquidity, it adds to investment dollars. And obviously crypto is a part of that, and we'll see some of those flows. Moving on, where else we're looking, we saw the FOMC last week. I continue to believe this has been the most transparent Fed ever and is throwing zero curveballs, yet somehow the market continues to be tricked by things that they do and say. What happened at the end of January with the FOMC, they left rates unchanged. They said it's not going to probably happen in March, but it is going to happen at some point. In my opinion, the market was completely ahead of itself, pricing in 5 rate cuts for 2024 as early as March. That made no sense to us ever, but because the Fed had never indicated as such. But now they've been more explicit. They basically said we're probably starting this summer, and we definitely will be in a rate cutting regime. I think what's interesting about this is that, purely as it relates to the equity market and not necessarily digital assets, is that on average, when you see the first rate cut, it does lead to a pretty big rally in the equity market. Historically, you can't argue with the fact that rate cuts are good for stock markets. But I want to just be careful here, and the chart doesn't necessarily show this, but there is a huge difference between rate cuts during a recession versus rate cuts when there's no recession. So even though the average data will make it look like rate cuts are always good, there are scenarios where rate cuts are not good for the market. And again, that's because, thinking about, well, why is the Fed cutting rates? So the Fed is cutting rates because something broke and we're heading towards a recession and job losses. That can be pretty negative. If we're cutting rates because we've already beat inflation, it's starting to come down, there's no real reason to have higher rates, that's obviously very supportive and very bullish. So, long story short, it does not appear right now that we have any recessionary trends. Well, earnings are happening right now. You saw anywhere from Uber to Disney yesterday to some of the big tech stocks, Meta, Amazon, Apple. Earnings are fine. Jobs continue to be plentiful, and we're going to be in a rate cutting regime anyway. So should be very supportive moving forward. Next, and Nick, I'd love, your thoughts on China here as well, but in the mid 2010s and even as late as the early 2010s, everybody was watching China, right? Everything China did mattered, especially in crypto, early 2000, late 2019, early 2020. What was happening in Asia was a big part of crypto. But most Chinese equities are straight down for the last 3 years. And it's just now in the last couple of weeks where it's been explicit that China is going to start supporting the market again. Everything from the, in my opinion, sort of hilarious and never works, like, banning short selling and restricting what individual investors can do, to just throwing money at the problem. Where do you stand on how impactful this is, especially after basically 3 years of declines in the Chinese equity market?
Yeah, I mean, and even going back to that cross-border capital work, I mean, they pretty much show that China is after the United States, it's the most impactful in terms of moving money around, in terms of affecting the global economy generally. What we've had over the last few months is the market get really excited about what the Fed is going to do, what developed markets are going to do in terms of monetary policy, and really start to rapidly price in easier policy. But China's just going the other way. I mean, the economy's been awful. Every single market is kind of at its respective, showing how poor growth is right now. And only now I think you're starting to see the fiscal and monetary authorities there really start to hone in on the problem and start to try to paper over the cracks here. So, you had a $278 billion package proposed to prop up the stock market. They've done a whole bunch of stuff with their like liquidity injections via reverse repo and the other sorts of credit lines that they have there. And so I think that could be the story, going forward. If you start to see the liquidity expansion continue to inflect higher, it might be China stepping in here and really kind of coming in line with the rest of the world.
Yeah, and I'm not exaggerating when I say stocks have been straight down for 3 years. I mean, basically since the peak of February 2021 to now, I mean, down basically 50% over that 3.5 year period. So, if you get any sort of a reversal here at all in sentiment and investor flows, certainly, continued support for overall risk attitudes in markets. And lastly, going to the bond market here, I think it's pretty obvious here that the regime from 1982 to 2022 of just rates moving straight down that bond bull market is over. We talked about this last month on the call about the 60/40 portfolio kind of being dead, not in terms of returns, but in terms of doing what it's supposed to do, which is protecting investor portfolios, meaning when equities rise, bonds are supposed to go down and vice versa. We're at the highest correlation ever between bond prices and equity prices. But, pretty clear that right now rates, even though again we're talking about a rate cutting regime happening, the overall backdrop of the bond bull market is over, and quite frankly, you know, at least for Bitcoin, this is part of a lot of the people's thesis who started investing in Bitcoin, 7, 8, 10 years ago, which is government debt loads are just too high. It's just going to be constant money printing and inflation to offset this, which is again a pretty bullish backdrop, at least for Bitcoin, if not for the rest of the digital asset market. So moving forward here, this is just a graph of the crypto fear and greed index. This is not unique to crypto. There's this exact same sentiment index exists for equity markets as well. But we like to look at this just as a pulse for kind of, when the market gets way overheated or way underinvested. We've had pretty sharp rally from October through really, I'd call it end of December, prior to the ETF, and then January, obviously pretty choppy from directly related to the Bitcoin ETF flows. But really, any froth that was built into the market as a result of the Bitcoin ETF has really been reset. And you can see there with the gray line, we're kind of back to, middle to lows in terms of sentiment here, which basically just means, there's nothing to fear in terms of the huge deleveraging, at least as of right now, right? There's just not a lot of froth. There's not a lot of leverage. There's not a lot of, hype being put into the market. So when you put all this together, in my opinion, quite frankly, this is the easiest climb to all-time highs we've ever seen for Bitcoin and ETH. You basically have the Bitcoin halving coming in April, which I'm sure will be part of our analysis for next month. You have all these ETF inflows, which we skipped in terms of this presentation because there's a tremendous amount of information out there already on what's happening with the Bitcoin ETF flows. But long story short, in January there was $1.7 billion of net inflows into the new Bitcoin ETFs. Basically, it was 7.7 billion of new flows, offset by $6 billion of outflows from Grayscale. But so you have the Bitcoin halving coming, you have continuous ETF inflows, you have supportive monetary policy in the US and in China, you've got stocks at all-time highs. I mean, as we are talking right now, the S&P is getting close to that magic 5,000 number. And we're basically a full year removed now from the 2022 carnage, which, not only did it crush investor portfolios, but really kind of a big setback to the market in terms of just faith in the crypto markets. We're now a full year beyond that. Most of the bankruptcy processes are well into their distribution of assets and plans for recovery. That's about as supportive. I don't know if there's a better way to say it, Nick. I mean, to me, this is as supportive of a backdrop as we've ever had heading into a new year.
Yeah, and I would only add just the fact that there are some real applications on the horizon that we've been looking for such a long time here. We wrote about this a little bit in Two Satoshis the last couple of weeks. We've talked about it. We'll have another webinar upcoming we'll talk about as well. But just seeing some real applications coming out of this industry that can actually drive this going forward as well.
Sure. So that's a good segue into kind of what's happening with the rest of the market. So, looking at the next slide here, one of the things we've been talking about in the equity market is even though we've seen all-time highs and such strength, there's really pretty poor dispersion, right? The top 10 tech companies have never been a greater percentage, or really top 8 have never been a greater percentage of the S&P 500. The same is true of the MSCI World Index, where 10 stocks make up 20% of the MSCI. So not a lot of dispersion in the equity market, even though we've seen overall strength. And what that means is the big leaders are leading stocks higher, but there's plenty of struggling areas as well, both struggling sectors, small caps, et cetera. The same is kind of true in the crypto market, right? So what are you showing here in terms of what is this basket that you've created, and what are you trying to show here with maybe dispersion or lack thereof?
Yeah, so I just picked 10 coins here that had pretty much led the market throughout the October through December period when we were really rallying, and just looked at how they've kind of performed since. I've got the this basket going back since mid-October, but just showing that those coins, the ones that were doing the best, have already reached their all-time highs again, despite, you've got in the bottom in the orange here, this is the total market cap of all crypto, and that's still below the all-time highs that it made kind of in mid-January. But showing like the strong coins, these leading coins that were doing well have continued to do well, and this is like across AI, gaming, DePIN, a whole bunch of the more sectors that are in the narrative right now, just continuing to shrug off this correction.
And what is that? That's Solana, that's Celestia, that's BitTensor. What else is in this? Maybe IMX, Ronin. What are,
Yeah,
what are some other names in this basket?
yeah. Render, Injective, let's see, Akash, and Helium.
Yeah, so we internally talk about an art score at Arca, talking about just overall. Another way to think about it maybe is upside and downside beta, right? When we're talking about investing, we're looking for even if tokens are very highly correlated with each other, and maybe one has better up capture and better down capture, meaning even if you have two tokens that have 100% correlation, they always move up on the same days, they always move down on the same days. Which tokens move up more on up days and move down less on down days, right? Or which ones have the best art score, meaning, they're just always going to be the ones that the market buys the dip on first or is more hesitant to sell in up days. And you're seeing it, right? I mean, these 10 tokens, and there's probably more than just the 10 you put in here, but it's a pretty good indicative basket, is that basically the strong keep getting stronger. On good days, these are the ones that are being bought the most. On bad days, these are the ones that are getting bought first. And it's my guess is this will change. This is probably a chart we want to come back to in future months. My guess is the composition of this basket may change over the course of the year, but probably we'll see something similar throughout the year, which is a handful of tokens and themes are really just going to drive the strength of the market.
Yeah, and maybe moving on here to the next slide, we've just got digging in a little bit more to more of the crypto native type of research that we do here. This is from Electric Capital, who puts out this awesome report. I think I'm not sure if it's every 6 months or every year, but they show developers across the various ecosystems within the space. And this one, it's a little confusing on the axes here, but I just thought it was a very cool way to show this. But basically, in the top left, you have the ecosystems that have been growing the most year over year from the end of 23 to the end of 22. And then in the bottom right, you have the ones that have kind of shrunk the most. And you've really just seen this cycling from these older ecosystems, things like Tron, things like the Graph. You got Tezos in there, Harmony, some L1s that people don't really think too much about anymore, into these newer ones, Polygon, ZK, EVM, Mantle, Linea, Celestia, some of these hot names that we've just been hearing a lot more about recently. You can see that really backed up with the developer flows into the ecosystem.
Yeah, and I think that another tool, we didn't put a chart on here, but for anyone who likes to play around, I mean, CoinMarketCap has a really useful tool where you can basically just get a snapshot of the top 100 at any time. So go back and look at what the top 100 coins were in 2018, like, pick a date, January 1st, 2018, then January 1st, 2019, 2020, et cetera. And you can just look at how that composition has changed. So, what was once in the top 10 or the top 25, or what was once what everyone thought was going to be the next big thing in blockchain tends to fizzle out. And you can really see that over time when you look at those snapshots of the top 25 assets and how they've changed. But also, it's another way to say this though is how remarkable it is that Bitcoin and ETH continue to be 1 and 2. I think that's equally remarkable. How many tech stories in history are basically the first two iterations are still the largest. So I don't know if that continues forever, but it shows, I guess, a little bit of the difference between blockchain technology and other technologies, that because you have the ability to invest at such an early stage, because you do have this almost religious cult-like appreciation for some of these technologies, that some of the first continue to be the best, even 5-10 years later, which again is abnormal in the history of tech. So a little bit of a push and pull there. Some things continue to fall out as normal, and other things stay on top. So moving ahead here, then, we're talking about out with the old, in with the new, with some of the protocols and some of the applications you just mentioned. Moving to the next slide here. Stablecoins showing basically the same thing. And, I've been on record multiple times saying that I think, stablecoins are by far the best killer app so far in blockchain. Um, but this is a pretty startling chart here. Shout out to Castle Island Ventures who put this together. But just looking at the volumes of stablecoins and how they compare to some of the other payment networks out there, from credit cards to ACH and Fedwire. This is, we went from what, zero AUM in stablecoins 5 years ago to now, at a peak close to 200 billion, now probably closer to 120 billion. But for the AUM to go from nothing to something that fast, but also for the volumes to just continue to be on the uptrend, even as there's been volatility in AUM, I think this is probably the most important chart to watch over the next couple of years here, right? Can US dollar stablecoins continue to have this usage outside of the microcosm of crypto, where sometimes things kind of fail to penetrate the real world? It's clear that stablecoins are penetrating the real world here.
Yeah, and I would just highlight, like, this is a recent chart from Castle Island here, but it only goes through 2022 just because they probably can't get data from a lot of these systems like ACH and Fedwire. Like, they probably have annual data that's not reported through 2023. And with stablecoins, if we actually updated this through 24, stablecoins would probably be ahead of Visa. And also, hey, you get that data in real time on the blockchain, like it the instant it happens. Just showing like the difference in quality between these systems and what you can do with these new innovations that we call stablecoins.
Yeah, and as we continue to see sort of the TradFi takeover of crypto, everything from BlackRock and Fidelity and the Bitcoin ETF to JP Morgan working on their Onyx project to, Apollo doing securitizations. Even if maybe we don't hear as much of the TradFi crossover with other areas of crypto, like, different smart contract protocols and DePIN and DeFi and things like that, I promise you they're all paying attention to this. I mean, this is some version of this chart they are seeing and they are paying attention to.
For sure. Moving on to the next one here. I just thought this was a really cool chart. We tend to look at a lot of different sorts of measures, metrics to break down where people are interested, which crypto ecosystems are really seeing inflows of capital, of talent, of developers, etc., of users. But this was just an interesting way to break it down. I thought this is showing in terms of DeFi, it's looking at the breakdown of TVL, so the amount of capital flowing into each of these ecosystems, but then saying how many different protocols is that capital split across. So you see ecosystems like Arbitrum, Ethereum, Solana having a lot of different, a bigger diversity of protocols that make up that TVL. Whereas on the other side, you've got like Tron, which has two DeFi protocols that make up the entirety of it. So, I guess just kind of showing like a bit of an indicator of the robustness of like the developer community, of the diversity of apps in the ecosystem. I just thought it was an interesting way to look at it.
When you look at this chart, I mean, when I think of Tron, I just think of, Tether, basically, right? The only thing happening on Tron in any meaningful way is the amount of Tether going through the system there from a transaction standpoint. But when you look at something like this, does this if you look at this chart, especially on the left here with Arbitrum and Ethereum, I mean, if you're looking for real world use cases of crypto, if you're looking for some of these applications that are really going to kind of penetrate and get to be that first, 10 million user app or 100 million user app or whatever the real tipping point is, do you think it's going to be related to this chart? Do you think it's basically the more cracks you have at it, the more likely you have? Or do you think it's going to be, doesn't really matter? It could be one blockchain that only has a couple of apps and just happens to get the hit app.
It's a good question. I think there's probably some nuance here where if you just showed like some other metric that was, I don't even know how you would do it, but you just showed overall apps and the amount of like mind share within, across that diversity of apps within the ecosystem, I think there would be a very strong relationship there, and much more likely to get that breakout coming there. This is just DeFi and capital within the DeFi protocols. So, maybe you're making a little bit more of an assumption that that app comes from DeFi, which maybe it does. But probably just a bit of nuance there.
Okay, great. Where else? So, we talked about overall macro backdrop. We talked about, a little bit of the Bitcoin ETF and liquidity there, and then talking about, certainly developer interest in stable coins. Where are the hot areas right now? Like, where are you seeing specific areas of interest and data showing some success in the crypto world? So moving on to the next slide here.
Yeah. So one thing that definitely hasn't died down since kind of the market really peaked and started correcting in January is the airdrops coming into the ecosystem, and you really see this wealth effect continuing through this month. I think we've had three multi-billion-dollar airdrops in terms of the FDV, the fully diluted valuation of the token, just in the last week. But this is showing Jupiter, which is the most popular DEX, decentralized exchange on Solana, and just how much activity it's been getting recently. They had their airdrop, I think it was last week, and that was a massive one for the Solana ecosystem. You had another big one, Dimension, come 2 days ago. That was kind of given across Ethereum, Cosmos, Solana as well, and that was another large airdrop. So you're really seeing that wealth effect kind of perpetuate in the space, and that just gives incremental conviction. I think that there's this positive reflexivity going on in the crypto ecosystem. People are seeing token airdrops happen. They're feeling wealthier. That's incentivizing teams to get very antsy about wanting to drop their own token, adding this greater wealth effect to the ecosystem, stimulating DeFi activity, as you can see here with the amount of swaps that are happening on these decentralized exchanges, and just kind of overall adding to the positive sentiment in the ecosystem.
Yeah, I mean, when I see a graph like this, I mean, obviously, one shout out to Dune and those who are creating dashboards on Dune. I mean, the fact that you can get real-time data into these ecosystems is fantastic for not just for investing, but just for understanding what's happening in the ecosystem. These can go both ways, right? I mean, we know with all these airdrops, it incentivizes activity. The question, of course, is then, is this activity sustainable? Are you creating a good enough product that after the airdrop is over, people continue to use the product? Or is this just creating mercenaries where they, do a bunch of actions, get their airdrop, and then they move on? I mean, obviously, Uniswap probably being one of the better success stories where the airdrop came, there was a one-time wealth effect, but the usage of Uniswap has never really waned post that. Whereas, of course, we've seen some others where, it's a flash in the pan, you get a huge spike in activity, you get your airdrop, or you get whatever sort of quasi loyalty type reward, and then activity falls off a cliff. Do you see anything happening with these specific airdrops that would make you tend to believe that these are sustainable ecosystems versus, like if you look at this Jupiter graph a year from now, do you think it's still up and to the right, or do you think this is going to be an anomaly of a spike?
It's hard to say. We really only have the Ethereum ecosystem as really good evidence of what happens when one of these ecosystems blows up, and how does that kind of play down to the various applications within that. And Uniswap was a great example where it kind of there was a time when it was a kind of 50-50 thing with sushi, and then Uniswap eventually took off and never looked back. With Solana here, you had, I think, a similar situation where there was Radium, there was Orca, and Jupiter's really kind of taken the lead here. So, I mean, I don't know, just based on their N of one, maybe that's the case, and it just never does look back. Something like this, I think, again, it just makes perfect sense to drop a token right now when the Solana ecosystem is hot like this, and you can kind of create that same edge that Uniswap got back when it dropped the token in 2019, and get people really excited about the ecosystem.
Absolutely. Yeah, I mean, look, we've seen plenty of incentive systems using a token. What about Farcaster here in terms of ones that's doing great without a token? I look at some of the big success stories over the last few years, and a lot of them have properly or improperly created their buzz via the wealth effect via the token. I mean, Farcaster, one of maybe just a handful that I've seen that has nothing to do with wealth effect, but is purely just an app that people like.
Yeah, and shout out to David and Mihal from our venture capital team. They've been shouting to the rooftops about this one, and really it's completely taken off just in the last month here. So Farcaster is a decentralized social media platform that basically lets you build decentralized apps on top of it. So you can think of any sort of social media application, you can build it on top of Farcaster and get the sort of credible neutrality that you would normally get, or that you get with like, any blockchain protocol. And the one that's really taken off here is called Warpcast. It basically looks a lot like Twitter. There's a couple other features. There's like channels that you can go onto and post into, so more kind of niche community groups that you can associate with than Twitter, which is kind of like shouting into the void or into the public square, whatever you want to think of it, however you want to think about it. But what really catalyzed this taking off here was the launch of an update called Frames, which is essentially the ability to execute code within a post. And there's been, the experimentation has been going on pretty rapidly in the last just couple of weeks here. But, just some of the stuff that's come out, someone posted a game, like a farming game. I think somebody did another, was it Doom or some shooting game that is just natively sitting in a post on Warpcast, and you can play the game from there. You've got some other apps that are kind of like Unibot, which is an exchange function we've talked about before, where you can just natively buy and sell tokens within the frame as well. Just some cool experimentation going on with this. It feels very kind of like crypto OG. I don't think it's really permeated mainstream yet, and I think a lot of people are kind of happy with that it's more you don't have the bots and stuff like you have on Twitter. So that's a refreshing for a lot of people who kind of live on crypto Twitter. But yeah, like Jeff said, really just seeing this take off and not completely reliant on token incentives or anything. So potentially promising application going on.
And just for some context here, I mean, this graph is showing basically no daily active users all the way up to 40,000 in a short period of time. We don't have Helium on here today, but I think we talked about Helium a month ago or 2 months ago. Same kind of thing, right? They went from a couple thousand all of a sudden to 40 to 50,000 subscribers. We've seen these kind of growths before, from the zero to the tens and even hundreds of thousands. There's only been a handful that have really gotten to the millions, and I'm not sure there's been anything that's gotten to the tens of millions. It'll be interesting as this year goes on to see if some of these that start kind of crypto native, that start sort of in a echo chamber of just crypto OGs, if they do start to penetrate what these numbers look like. Like, are we going to start looking at some of these Dune charts in 6 months or 12 months or 18 months, where you really start to see millions of people flocking to this, not because of short-term incentives, not because of airdrops, but just because it's just a better product. And this one certainly, as of right now, seems to have quite a bit of buzz around it.
Yeah,
So,
and maybe just moving on to this last slide here, maybe prediction markets is somewhere where we could see that happening. So I'm showing here volume on a prediction market called Polymarket. This is something I've been excited about for a long time. Hasn't really turned out so far, but really just in the last month, starting to see a lot of interest on these prediction markets. So these are basically platforms where you can write any arbitrary question and create a market to bet on the outcome. So you could be, who's going to win the Super Bowl this weekend? Who's going to win the presidency? What will Bitcoin's price be over $50,000 by March? And then you create a liquid market where people can bet on that outcome, which I think is awesome. It basically lets you create a market that can predict the future of anything. It doesn't have to be just financial. It's basically what the financial markets are, but extending that use case beyond kind of the financial world. So you see, really heavily on Polymarket, it's a lot of politics stuff recently. And certainly that's been helped. Former President Trump has been tweeting, his poll odds or posting them on social media from Polymarket, which is it's certainly some shining some light on Polymarket there, and that's really contributed to just a massive spike in usage here.
yeah, and bringing it kind of all back to investing. I mean, January was an interesting month, right? We had the Bitcoin ETF where you had, the market, Bitcoin was up as much as 16% at one point, then it was down as much as 10% at one point, and then it ended up pretty flat. Amidst all of that volatility, though, there was really only a handful of tokens that were really higher over the month of January. In fact, I think 3/4 of the market was down in January, and almost 2/3 of the market was down more than 10% in January. So, we're showing off pockets of strength in the blockchain world, not necessarily always translating into strength in the tokens. What I think will be interesting as the year goes on here, again, knowing that the backdrop is incredibly favorable, is when are these growth in blockchain usage and when are these growth in apps also going to be highly correlated with the growth of those tokens? And, most of it is going to be thematic and it's going to be sector based. So, just today alone, we've talked about gambling, we've talked about Web3 social, we've talked about DeFi, we talked a little bit about AI and gaming. There's a lot to keep your eye on this year. And actually, it's a good segue into kind of what's next, for Arca. We hope everybody can join us to talk specifically about DePIN, right? This is decentralized physical infrastructure networks. This is where things, like Helium and like Akash fall into that mix. We're going to be doing this periodically throughout the year. Obviously, I hope by now that Arca puts a fair amount of content out there between the weekly write-ups that we do, that's our two Satoshis, to the monthly calls that Nick and I are doing, to some of these more thematic research-focused webinars. Check the Arca website at ar.ca. Get on our mailing list, see some of these things that we're doing, because our goal right now is to continue to show off, again, the nuances and the depth of the digital asset market beyond Bitcoin, beyond just prices, beyond what you see on CNBC and Bloomberg. I really get into the weeds here. So send us a note, send us your thoughts, give us some feedback. But appreciate everyone joining today. Nick, as always, thanks for your insights. You can find Nick on Twitter at Nick_Hotes. Obviously, you can find Arca at our website at ar.ca. But join us for next month's call. Join us for the DePIN webinar. And thanks for your time. We'll see you next week.